when you inflation adjust and you look at it relative to how much devaluation has occurred and how much M2 has been created and actually what gold prices have done, we're actually not at a high. Now, I think we'll get there. If we have a blow-off top between now and Thanksgiving, yeah, we'll have a correction. And my guess is the correction is always proportional to how far you are away from fair value. So if you're 50%, if you're 100% above fair value, you got to drop at least 50, but then you normally go another 50 of that 50, so that's another 25, so you get down 75. Well, in a world where a bunch of old white guys, I hate to say it, but a bunch of old white guys decide what the interest rate is, that's not a free market. That's market manipulation.
Mark Yusko opens with a simple but powerful truth. Bitcoin's rise is inevitable, not because of speculation or hype, but because fiat currencies keep losing value. Around the world, governments continue to print more money, dollars, euros, yen, lira, and every new round of currency creation dilutes the worth of what's already in circulation. Measured in US dollars, Bitcoin may seem volatile, but when priced in lira, bolivar, or peso, it's been setting record highs for years. Before we continue, don't forget to like, subscribe, and turn on notifications for more insights on Bitcoin and the digital asset space. Drop your thoughts in the comments. Your engagement helps the channel grow. Now, let's get into it.
There's an inevitability about Bitcoin's price in dollars or yen or euros or whatever you want to price it in, rising as countries devalue their fiat currency. And the more they devalue, the higher the price. You know, it's funny. Most of us talk about Bitcoin in dollars. That's our kind of reference point. But like if you looked at Bitcoin in lira, it's been making all-time highs for years because the lira has literally devalued 99.9%. Same thing in Venezuela. So there is this, I call it home market myopia, where one, you think all the smart people are in your home market, which is clearly not true. Two, you think you dominate every market. Like, all the stocks are traded in the United States. Well, that's not actually true. I mean, some of our stocks now are crazy valuations, so they dwarf, NVIDIA dwarfs the entire Japanese market in the MSCI World Index. I mean, and Spain and France. And so that can definitely happen. But in digital assets, I think it's interesting. You got our president saying, oh, we want to be the crypto capital of the world. And then the Bitcoiners are like, no, we want to be the Bitcoin capital of the world. Okay, fine. But neither one's going to happen, right? We're 20% of global activity. Binance is orders of magnitude bigger than Coinbase. As great as Coinbase is, and as great as Kraken and Gemini and these other exchanges are, Binance runs circles around them on a global basis. So, Tether is this gigantic beast of a company. We're all excited about Circle, right? Circle goes public. Great. Goes up to $40 billion market cap. Fantastic. Excited for Jeremy and the crew. But I heard a stat that Tether makes more every 4 days than Circle will make in a year.
Wow.
So what's that worth? Now they're trying to raise money, I heard, at a $500 billion valuation, which would make it the second largest bank by market cap in the world behind JP Morgan. Pretty impressive for a company with like 50 employees. So that's a rambling kind of strange answer to your question about how I feel about the all-time high, but it is a high, right? I mean, 126 yesterday is higher than we've ever been. But when you inflation adjust and you look at it relative to how much devaluation has occurred and how much M2 has been created and actually what gold prices have done, we're actually not at a high. Now, I think we'll get there.
Sure.
And then the big question on everybody's mind, and yesterday was interesting, October 6th, we're recording on the 7th. October 6th is interesting in that if you look at the previous two cycles, the 17 cycle and the 21 cycle and now the 25 cycle, if you look at 17 and the 21, the time from cycle peak to low is 364 days in both of them, precisely. And then the time from cycle low to cycle high is 1,064 days. And so 1,064 days from the previous low was yesterday. And what's crazy is there's a guy, and I wish I could remember his name so I could give him credit, but I saw there's this guy that tweeted in 2023, 2 years ago, that the simulation will be repeated and the new high will occur on October 6th, and then we head back down.
That's pretty wild. Wow.
Now, there are a whole bunch of people who are like, no, we're going to the moon by the end of the year. I mean, maybe. So anyway, lots of stuff to talk about.
But Mark, is your base case still, and I think you alluded to it, the currency devaluation that's happening around the globe by central banks, that's driving asset prices higher? Because as you mentioned, gold is ripping, you got real estate ripping, even though the mortgage industry is like flatline, and then you have the stock market going nuts. So are all these assets moving with the liquidity from around the globe?
100%. Look, liquidity drives markets, one of my favorite things to tweet. And at the end of the day, this is money illusion. Right? Stocks are not at all-time highs, right? I mean, yes, nominally they are, and you can't debate that. But in real terms, meaning if you price them in anything other than, the toilet paper, which is the US dollar, or the yen or the euro, which you're going to race to the bottom to devalue, if you priced it in anything solid, pun intended, like gold, here's the crazy stat. Stocks are down since 1900 priced in gold.
Wow.
They're actually not up. Now, you say, but that doesn't count. I'm like, well, it kind of does. And look, most of us don't feel it when things are more expensive. Our rent is higher. The price of a hamburger is higher. You're up in New York, New Jersey. There's this place in downtown New York where they only take cash, and there's a huge line, and you get the privilege of paying $30 for a hamburger. And I went once with one of my guys, and it was a perfectly fine hamburger, but it wasn't like 20 times better, or 10 times better than the other hamburgers I've had. Sure. In fact, I probably prefer Shake Shack's hamburger over that. But that illusion is what's happening when inflation, right, which robs us of our wealth. And for most of our existence, up until 2009, there was no alternative, right? You lived in the fiat world. Everyone lived. We lived in the fiat world. We earned dollars. We tried to save dollars. But the problem was, in saving dollars, if we didn't put them at risk, like if we just put them in cash, then every day they're stealing a little bit back through this thing called inflation. And what's really funny about inflation is the normal state of a productive, innovative society is deflation, not inflation. Well, what do I mean? When you think about it, if you innovate, then you make things better, right? You're getting more for the same amount. That's deflation. Or cheaper, right? You can produce more, like the Model T Ford. We discovered the assembly line, and so cars started to go down in price. And from 1776, when we started as a republic, till 1913, there was no such thing as inflation. We had a persistent deflation. Now, it was interrupted by a couple big wars and a depression, like the depression of 1848 or something like that, was worse than the Great Depression, but no one ever talks about it because it's too long ago to remember. So in 1913, the Fed was created. And what does the Fed do? Well, the Fed artificially manipulates markets. So free markets are prone to deflation. Because if I can compete, let's say there's some provider of a good or service. If I'm in a free market and I can compete against that person, I'm going to try to win business by maybe underpricing or making something better, both deflationary. Well, if the market's not free, right, if there are barriers or tariffs or restrictions or regulations, then you tend toward inflation. Well, if you manipulate the price of money, meaning in a free market, people would bid openly on the acceptable return that they would take for safety, right? Someone would say, well, I need 6%. Someone else say, well, I need 5.5%. I need 5%. I need 4.5%. And there's a natural market clearing price for risk assets. Well, in a world where a bunch of old white guys, I hate to say it, but a bunch of old white guys decide what the interest rate is, that's not a free market. That's market manipulation. And so in that environment, you get a persistent theft, and I use the word intentionally, of real wealth from the masses to the few. So income and wealth ownership, that divide becomes greater and greater and greater. And today it's the highest it's ever been in history. And I think it's interesting. Like I understand why the people in the club, right? They say it's a small club and you ain't in it, right? I understand why the people in the club want that. What I don't really understand is why the rest of us don't pick up the pitchforks, literally, at some point and say, no mas. Like, we want open and free markets. We don't want this manipulated market. Inflation, like, who convinced an entire population of people that taking half of my purchasing power every 30 years is a good thing? That makes no sense, right? I mean, I worked hard for that money.
Mark Yusko makes a compelling case that Bitcoin's rise isn't speculation, it's math. When governments debase fiat currencies through relentless money printing, hard assets like Bitcoin and gold inevitably reprice higher. He's right to call out the money illusion. Markets may look strong in dollars, but when measured in real value, assets have actually lost ground for decades. His point cuts deeper. Inflation isn't prosperity, it's policy manipulation. Central banks have replaced natural deflation from innovation with engineered inflation, quietly transferring wealth from the public to the elite. In that light, Bitcoin becomes more than just an investment. It's a monetary alternative and a long-term hedge against systemic devaluation. In short, Bitcoin isn't rising because it's risky. It's rising because fiat is failing. Thanks for watching, and stay tuned for more insights on markets, crypto, and the future of money.